let's get started. So thank you everybody for joining. It's an exciting night, an exciting show we have planned here. We're going to be talking about equity crowdfunding and all the new changes. So the group of folks on the panel, absolutely amazing. I won't spend time introducing them, but as part of, asking the questions, they'll give you context as to their connection. But, the situation we're in right now is you have low interest rates, you have alternatives are hot as ever, everything from Bitcoin to baseball cards, and now equity crowdfunding is taking the mantle to move fast next. So let's just take a step back into history with Congressman McHenry. Thank you very much for joining. I know for folks that haven't joined, you have been instrumental for a decade, if not more, to navigate all of these rules, from no equity crowdfunding being available to now the new rules all the way to 5 million. Can you just give us a little background as to how we got here? And everybody wants to know what it's like working through Congress to make this happen. So give us some of the gory details of how we got here.
Well, this was 2011, and I read a story about Pabst Blue Ribbon, right? So any good story starts with a beer. So PBR was looking to sell, and so they had this idea that some guy had an idea, and he said, "Look, I'll just have a Facebook group, and I'll say, you want to buy a beer company?" And he took these sort of pre-orders of people that were interested, not in making money, but just having a piece of a brewery, right? And so he got all these pre-orders. You call them pre-orders, but he had all these folks that were interested in investing in Pabst Blue Ribbon, and he thought, this is fantastic. I'm gonna do the legal work and figure out how to do this, right? Well, before he could actually do the legal work, he got a knock on the door from federal agents from the Securities Exchange Commission telling him he was breaking a number of securities laws, and this is how it came to my attention. The idea here was that the crowd could own a business or a brand that they like, that they're interested in building up, whether it's a community coffee shop or Pabst Blue Ribbon, or now like Gumroad, which the idea of having those that help create the business have the upside interest was what I wanted to enable. So I worked through the legislative process to target as much space as possible. Originally, my idea was under $10 million, and you have low dollar offerings of people investing up to $5,000. That was my original, actually up to $10,000 was my original concept. And along the way, we got through what is now called Regulation CF, or Regulation Crowdfunding. And that was about investment crowdfunding. And it being legally permissible under federal law to raise a small amount of money from a lot of different people. And thankfully, because of the changes the Securities Exchange Commission recently made, it is a much more usable and applicable device for raising funds.
Awesome. So Ken, you run Republic, and you've been around now for a few years. I'm sure today was a special moment. Can you let us know, like, what are the actual changes? Like, what regulatory wise changed for the entrepreneur, for the investor yesterday?
Slava and Evan, first of all, thank you for hosting this conversation. Sahil, congratulations. I'm sure we're going to talk more about your successful campaign in a bit. And Congressman, it's such an honor to see you or to hear you. You're truly the father of regulation crowdfunding. But Slava, to answer your questions, several rules changes that went into effect yesterday that I think will significantly improve Reg CF for both founders and investors. The headline news is that the amount that startups or small businesses can raise each year through Reg CF is increasing from 1 million to 5 million. I mean, this change alone should really amplify and boost the industry forward in many ways. It's going to encourage much more credible, mature companies like Gumroad to actually avail themselves of regulation crowdfunding. And in turn, it's better for investors, right? The more mature companies with higher revenue are lower risk by definition. So the increase in the cap, I think, goes a long way in serving both founders and investors alike. It also allows for now SPVs, enabling people to invest through a special purpose vehicle. That's what SPVs stand for. And that makes it a lot simpler for founders. In certain contexts, it's not the only solution. There are different ways to have a simple cap table, but SPVs, that's certainly a common way. And the third one that I think is very key is the ability for companies to so-called test the waters. That means that before you go through with accounting and financial reporting and SEC filings and all of that, you can at least test out to see if there's enough interest. You can talk about your intention to raise. And I think that's just going to simplify things and make things a lot less intimidating for companies to at least get a read before diving in and then complete a Form C. And last but not least, at least this is just a few of many, many changes, but I think it's a very important one. Before, there was a cap on how much an accredited investor, meaning the Elon Musk of the world, could invest, and that didn't make a lot of sense, right? If you're a billionaire, why should you be capped at $100,000 per year? So now the new harmonization amendments have undo that cap on accredited investors. These are just a few, Slava, and happy to dive in much more in depth on a few more as the conversation proceeds.
So thank you, Professor Ken. That's a lot of theory in the classroom. Sahil, you heard about this, several months ago, a couple of quarters ago when the rules were announced. Let's not talk about the raise yet, because obviously you crushed it yesterday, raising $5 million from over 7,000 investors. But when you heard about the rule changes, what started happening in your head? Like, what are you thinking about? How are you going to optimize for this? Is this a good idea? What goes in your head when you heard about these rules before the actual raise yesterday?
Yeah. So I tweeted out in 2019 that I wanted to figure out how to get creators equity in Gumroad. That was really important to what I wanted to do, is sort of blur the lines a little bit between employees, investors, and customers. And I looked at Red Crowdfunding. I think that's when I started talking to Ken and the team at Republic. And it was just not, 1.07 million was just not significant enough to really be meaningful. And, I couldn't even really test the waters. I couldn't really gauge demand. I had a smaller audience at the time, and it was expensive, right? If you're raising 1 million, legal costs will end up cutting into that quite a bit. And so, yeah, when I saw these changes, I think there's sort of two profound changes that Ken has covered, or three maybe with the SPV stuff. One, just the amount of capital I can raise is just dramatically more, and it goes from 1 million to 5 million, and that's not going to 5x crowdfunding. Like, that's going to 50x crowdfunding, because as Ken mentioned, the types of companies, like Gumroad didn't go from raising 1 to 5. We went from not raising via this method to raising via this method, right? We went from not having product market fit to having product market fit. And so I really think people are just generally underestimating the UK, for example, is around 60x of the US equity crowdfunding wise today, or sorry, as of 2018, but roughly I assume that the ratio is pretty similar today, because the UK has different rules, and we'll get there, I think, in the US as well. And then, so that's cool. And then testing the waters. I had some experience with this with the rolling fund, and thanks Patrick again for that too. The Jobs Act has really had a profound impact on my life in the last 12 months. But the Jobs Act, for folks who don't know, also enabled the 506C exemption for funds to be able to generally solicit, as long as you're sort of qualifying these people are accredited or qualified purchasers. So I was able to raise my fund on Twitter. So I saw the power of doing this, of like just being loud, right? And like having people come to me and tell me that they're interested in using Zoom and Twitter and Clubhouse to have these sort of conversations at scale, instead of one at a time networking my way to endowments or whoever else, right? So anyway, when I saw this change happen, it was literally, I think it was almost immediate. like I was like, yeah, cool, yeah, we're done. Of course, we're gonna do this. Like it's enough money for it to be meaningful. COVID had sort of happened in between, so Gumroad had started accelerating quite a bit. So the valuation meant we wouldn't need to dilute as much, and the fact that I could test the waters, even though technically I wasn't supposed to do that until Monday. Just the confidence that was a change that I wanted to be an example. Like I wanted to show people not just the sort of the theory that Ken spoke about, but like what this actually looks like in practice. And I think I was well positioned to be early.
So can you share what that means, test the waters? What does that mean in your situation?
Yeah, so it basically means that, for example, I could go on Twitter and I could say, hey, I'm raising a round for Gumroad. I want to raise, let's say, $5 million. Maybe you've even raised some capital from institutions or from accredited people, and you're matching it like how we set up the round, and just figure it out. Like just get that, start that conversation. Like as of Friday, for example, if you wanted to do a crowdfunding round and sort of be fully compliant, you would have to commit to doing a crowdfunding round. You'd have to do the whole thing, kind of like a fund. You'd have to do so much work before you could tell the world. And then when you tell the world, there are all these people who are like, damn, you're doing that. I want to, so I just think like it changed the order of operations to a place where you can basically, you can sort of have an MVP, quote unquote, right? You can put up a landing page, and like that idea that like, imagine if you couldn't do that for a startup, which by the way, you couldn't 50 years ago or 20 years ago, right? You had to like package software and put it into stores before you knew if there was any real demand. And the internet has changed that. So it's really just taking that D2C model approach and applying it to startups and equity crowdfunding. So I think it's a really subtle change, and certainly the 1 to 5 million is going to get all the buzz because it's the number, it looks big. People like talking about money, et cetera. But I think people don't really realize like how big a deal it means that like any founder now can say, hey, I want to do this, and just their audience can tell them if they should or not, and I think that's going to be pretty powerful.
That's great. Congressman McHenry, so when this was raising from 1 million to 5 million, did you have in mind Gumroad, or did you have in mind other tech companies, or was it just the beer companies? I mean, which companies did you have in mind when trying to pass these rules?
No, my goal was to open this up and let the market determine how it's going to fit. That was my goal, is just to create the space and then let the creators, the entrepreneurs, do the hard work of figuring out how to make it work. So what I try to do is create as much free space as possible for average investors to have an opportunity to have an ownership stake. And my original idea was $10 million. And we had to compromise down to $1 million. But along the way, I said, well, we need to give the Securities Exchange Commission the authority to raise this. And thankfully they did, with a lot of pushing over the last couple of years from me and a number of other folks on the Hill. But the idea here is you try to create the space for money to go where it can be used best, and where investment capital can be used best. And that's my whole goal, is just to be on the side of the investor, on the side of the entrepreneur, and to create as much space for freedom as possible. And then let people shake it out and be creative as they can possibly be.
That's great. And then what was your thinking on the investor side? Obviously, we have all these GameStop questions. We have concerns about how people are investing into public companies. These companies are, smaller, potentially more risky. I mean, how do you navigate that through Congress? And, what's your perspective on that from a regulation perspective?
Yeah, my view on that is that you can go, well, first, buyer beware, right? Most companies fail, especially most startup companies fail. So buyer beware. That's number one. Number two, what we have now is a permissioned marketplace when it comes to investment capital, upside potential, but not a permissioned space. Meaning anyone can go out and take action, like buying a lottery ticket. So while we're saying you can take good money and make it dumb, why don't we make good money and make it better through investment potential? I think we're seeing right now in society that you have average everyday investors don't have the upside potential as a privileged few do through accredited investor standard, a number of other limitations on average everyday investors investing in startups or businesses.
Great. So on Vincent, we're seeing about 25% of our deal flow is from these equity crowdfunding deals from various platforms like Republic. Kendrick, can you just give us some color as to the diversity of the companies that you're seeing?
Yes, Slav, and I just want to also, before that, add on a point to what the congressman just said. From the market perspective, the crazy thing is not just in the US where there has been no instance of fraud. If you look at equity crowdfunding in Europe, which has been around for 5 years before the US, there has also been no instance of fraud. So when it comes to investor protection, of course, earlier companies are, riskier in terms of the likelihood of loss of capital. On the other hand, unlike the public market, you don't have the kind of predatory behaviors that comes with instant liquidity that you do see, with the public markets in the past several decades, but certainly most recently through Robinhood and GameStop and Reddit. So the narrative that public markets are necessarily safer for retail investors, I don't think is necessarily true. To answer your question, Slava, the added component to that is that when people invest in a company, in a small business, it doesn't necessarily just about, am I going to make 5x, 10x, or what have you? The pandemic and how restaurants and local businesses and coffee shops have been decimated, and local people actually really want to support these businesses. In fact, in many instances, they donate their money. And I think this law has been and can be used to amplify and align interests in ways that are well beyond. I'm not saying that it's above or that it's different. I'm saying that it's return on investment added on to social value, to people's passion. And that's why you have to see investing in a whole new landscape. And that's why I think regulation crowdfunding, regulation A, I think it's going to go a really long way in redefining how people think about private investing and alternative assets. But the diversity of deals, of companies that have come to us to avail themselves of retail capital ranges from restaurants to coffee shop to YC company to more mature company, and most recently even a venture firm, Backstage Capital. And I think there are some members from the Backstage team on the Clubhouse session today. But the most elite model of business, a venture firm, even that can find a use case very effectively through regulation crowdfunding, just as an example.
Awesome. Thank you for that. So man of the hour, Sahil from Gumroad, raising, $5 million plus $1 million before that with Naval leading. So $6 million on a $100 million valuation, 12 hours to do over 7,000 investors. Let me start off with, the specifics. Why did you choose to do this route? Given that your business is doing well, COVID has been a massive tailwind, you're in the middle of incredible trends with the creator economy. Why choose equity crowdfunding amongst your choices and options?
Yeah. I mean, look, Gumroad's in a great place. We're now almost 10 years old, profitable, growing nicely, great team, great product, great customers. And I just think, I don't know, I wanted to involve my constituents. Like my most, in 2015, I had to do this round of layoffs because I effectively had to choose our creators, supporting our creators over our investors and our employees. And I'm just like, how can I avoid having to make a decision like that again? Maybe one way is to turn our creators into our investors and our employees. And so I just think it just made so much sense. And, there are other options. If you wanted to do, you could go the crypto route, or you could there's other things, but I felt like regulation CF, it was similar enough to what people were used to. It's a very simple mental model, right? Which is like, it's Kickstarter, except you get equity. And I think that's just really, really important. It's why I picked 100 million. It's because it's just really clean, really simple, really easy to understand, really easy to tell somebody else. So I just think it just feels like it has that the simplicity that I really wanted. And the results, I mean, like, I can tell you, looking at the database stats right now, just to see, I had no, one of the things I want to figure out is this actually going to make Gumroad grow faster, right? Having 7,000 plus investors and all the sort of halo effect of raising money. And according to our database, roughly around 1,500 to 1,700 people add products to Gumroad every day. That's around 3,000 or so products a day. Yesterday, 4,600 people added products, so 3x the usual, over 6,000 products. So I mean, that's crazier than the COVID jump was for us. Like, and obviously that's, a spike due to the buzz. But I just think, like, people often talk about value add investors. But in Silicon Valley, you might raise from 10 people, but they all are offering you the same amount of value. I think it's a potentially much more interesting model if you can still do that, right? You don't have to say no to that completely. There's plenty of value that those people do really add, but you can sort of get diminishing returns. You can get some of that, and then you could do the rest via the public. And I think if the next 6 months or year show that Gumroad is actually meaningfully, like, growing significantly faster because of the crowdfunding round, it's just going to drive more and more usage of the crowdfunding model, right? Because that's ultimately what founders want, is they want their companies to be, obviously there's multiple things at play here, but I want Gumroad, if Gumroad can be more valuable while I give equity to creators, that seems like a win for everybody.
Great. And there's a lot of people in the room, and they're like, I want to be like you. You're kind of like the new Michael Jordan. And they want to have seen that you just did this yesterday. They weren't ahead of the game 6 months ago to be the first people out. But now, I want to raise $5 million just like him. So that's an easy question. The longer answer is obviously, why don't you just build a business for a decade and, have a huge following and be active every day and have lots of passionate followers? Let's remove that for a second and say, tactically, what are the things people need to think about? What did you have to kind of navigate to get to the point that you are here? What is the playbook that you can share with others in a few minutes?
Yeah, I mean, now with testing the waters, the first thing I would do is make a pitch deck or make a Notion memo and explain the business, just like people should already be doing for their businesses, and put that in a place where people can visit it and then ask, and tweet it out. Tell your audience, tell your friends and family, just like think about how you run a Kickstarter campaign, and start collecting that demand. And by the way, you don't have to say, like, by this date I need to do it, right? You can just say, hey, at some point in the future, once we have $1 million in interest, I can go do this. So, like, you can just have it it can even be part of your onboarding for your product, right? So I think there's all sorts of ways that we'll start to see people kind of build this into their sort of workflows. And then just, practice pitching. Like, I think Gumroad, I don't really pitch to investors, but I'm, like, effectively selling Gumroad all the time, right? Like, I'm constantly sharing information. I'm constantly doing these board meetings, publishing the financials. People always ask me questions. I have to answer them. So I think I've just had a lot of practice on, like, how do I explain what Gumroad is, how we're doing, how to value the business, to people who may not be as intimately familiar with, with some of the terms and some of that language. But ultimately, like, the short answer is the right answer. It's just, you have to build a business that's interesting to people, and then you have to educate those people so they not only just understand your product offering, but also your business fundamentals. And then you have to make them, you'll gain their trust over time. I've been building this level of trust with people, I think probably for some people since 2010, right? So even though it looks like sort of a quote unquote overnight success, I raised $5 million in 12 hours with a $1,000 max check size, explicitly made so that wouldn't happen. It's a lot. I think it's a lot of, it's both the shortest fundraise ever and the longest fundraise ever.
Yeah, I mean, I always like to say that overnight success usually takes about 10 years. Just the people that work the hardest make it look the easiest. We had the same experience with Indiegogo. So I'm going to ask Kendrick. So, what do you think this impact is going to have of these changes, on the market? Like, what do you predict?
My prediction is that sometime within this decade, and I'm not sure if it's going to be over the next 18 months or 4 or 5 years, but any business model, and it can be a B2C company, it can be a movie, a sports team, a musician, anything that consumer, the retail public consumes and becomes a stakeholder by virtue of being a customer, that those customer or some of those customers are gonna want to be investors, and it becomes like a mainstream thing, all the way to like the uh y- like marquee movies, X-Men, Marvels, all the way down to documentary, to coffee shop, to pre-IPO or pre-SPAC, Series D, Series E. I think it's just going to be mainstream adoption. One of the most powerful thing about what happened yesterday, and particularly with Sahil and the Gumroad campaign, I think first and foremost is that it put something that almost all of us on the call, knows about, but most people still do not know, that you do not have to be an accredited investor to invest, and that it doesn't take a year, it doesn't take $1 million to prepare to do this. So the mainstream awareness of that this is real, I think just that alone is gonna move this trend forward that much faster. Obviously, I'm a huge believer in the retail revolution, and I think that retail capital in the next months and years is going to be the dominant force of capital source compared to private capital, which currently, of course, is the main thing that founders look to. But it shouldn't be the case, and it will not be the case in due time.
Yeah, I mean, in my opinion, did somebody want to jump in?
Yeah, well, I had a quick question for Kendrick, just sort of on that topic, and it's because now that the floodgates have effectively been open, do you feel like this sort of disruptive fundraising mechanism at these large volumes is going to have an impact on the traditional system? The pre-seed funds, the angel investors, the movie financiers. Like, how do you feel this new like revolution will have an impact on the existing fundamental market?
That's a great and difficult question, Evan. And I think Sahil and I had a conversation yesterday. Within the venture ecosystem, I think a lot of people look at retail capital as potentially competitive to venture. I think that there are elements of that may be the case, but I think it's much more additive to the ecosystem. Now, 1 out of 1,000 companies become, get to where Gumroad is. But in the earliest of stages, the type of companies that raise $50,000, $100,000 from friends and families. Well, what if you don't have friends and families that can invest, that can, dish out $5,000, $10,000 in angel investments? So I think equity crowdfunding has and will continue to feed into a much larger pool. Out of that 1%, even 1/1000 of a percent becomes venture backable, that is still a lot more than what currently exists. So I do think that retail capital actually feeds into the future of venture capital in expanding that ecosystem. And then there's a whole, landscape, the entire industry of businesses that have nothing to do with being venture backable, that people invest based on revenue sharing model, based on just having a little bit of skin in the game, maybe limited revenue sharing, profit sharing, that I think will make retail capital as an industry vastly larger in its potential market than venture capital or even private equity. So long-winded way of answering your question, Evan, is that I think we are looking at the first few minutes into a whole day of an entirely new industry that will outsize venture capital and private equity. And it's going to take a number of years for it to fully mature, but I'm certain that is heading that way.
Hey, Jason, I see that you're on stage. Are you available to answer a question?
Sure. Yeah, I was just sitting here in awe of what Kendrick has accomplished with Republic. It's just really inspiring, and congratulations to Sahil as well, who was just on This Week in Startups today, and we'll have that episode out in a couple of days. But it's really inspiring to see, you know, Sahil raise $5 million from civilians who really are looking for interesting things to invest in, and they deserve to have the right to do that and deploy their capital and how they see fit. So I really feel like this is important. It's the American dream, and I generally hate politicians, but I love this guy Patrick.
Patrick is great. Going back a decade, he's definitely a homie. I'm not sure if he's a bestie yet, but we're definitely.
Well, I'd love to be a bestie. I mean, if I could rank up there as a bestie, even like a worst of the besties would be still pretty incredible.
Give it time, Patrick.
I do have a quick question for you. So, Jason, I mean, you are an angel investor. You have a fund. You run syndicates. You've seen unicorns. You know lots of investors. We just mentioned that this might be the early stages of potentially disrupting, adapting, changing how equity crowdfunding interacts with venture. I know it's very early, but we just saw what's possible yesterday. Do you have any opinions and predictions how this plays out in the coming year or decade?
Yeah, I mean, listen, I've been in the industry for 30 years now and an investor for 10. And when Naval showed me syndicates at AngelList, everybody said that would never be a thing. And I did a deal in a meditation app for $5 million. And that company is called calm.com, and it became worth over $2 billion. And it's been the greatest investment. It's the second best investment in my career, right behind Uber and before Robinhood. And if I hadn't done the syndicate, I would have put 50K into the deal, but the syndicate came in for $328,000. And the founders of Calm, 6 or 7 years later, very touchingly told me that they were going to shut the company down and that I was their last hope. And I don't know if that's true or not, but it made me emotional just thinking, wow, 40 different investors told them no, and they got one yes. And I tell you, that is a great feeling. You talk to any investor, but when you hit a grand slam like that, it's super meaningful, obviously, on any number of levels. But when you're the only one who believed in it, that really becomes meaningful as your career. And then you fast forward, I met Ken, I don't know, 4 or 5 years ago, and I was like, equity crowdfunding, okay, it's a lot of work and it's a lot of paperwork and it's a lot of regulations. Let's, start the conversation. And I actually did a little equity crowdfunding test before even Republic, I think, existed with Inside, with Seed Invest, another great platform. And everybody's been deriding equity crowdfunding. And I see a pattern here. Anytime a new way of funding companies comes along, people deride it because people are scared or it may threaten certain people. It's not going to replace venture capital. Venture capitalists will always exist. They add a certain amount of value beyond capital. We all know that. But boy, is this an amazing addition to the funding stack. And for people who have 10,000 customers, 100,000 customers, think about Airbnb or Uber. The ability for them to allow the drivers or the hosts to participate, or back in the eBay days or Etsy days, the crafts people who were just doing great work. I really think it is a revolution. And I do think Ken's right to tell everybody, listen, this has got a long way to go. There's a long way to go here. People are going to conflate Sahil raising $5 million in a day with the fact that he's been on a 10-year journey and that he's got a company that is doing over 10 million in revenue and is highly profitable. So let's not, put out a false narrative that anybody who puts their, idea or, MVP up is going to get $5 million. This is a unique moment in time because of Sahil's great work and his doggedness and resilience. But there is something here that could very much continue to make America, and I know Patrick's a patriot. I don't know if he's a Democrat or Republican, but I love him either way. America is about capitalism, is about people pursuing their dreams. And capital allows people to pursue their dreams. And it's really important that it's fair, right? And there's a lot of diversity on the stage here. So congratulations, Ken. Congratulations, Sahil.
Jason, I have a question for you, and if I may, Slava. Um, and Jason, first of all, thank you so much for the generous feedback. And you're one of the earliest investors in Uber. If you go back 8 years, and Uber and Lyft at the time were, competitive, comparable size even, would you recommend to Travis Kalanick, if regulation crowdfunding was available then, to do a campaign and engage the many drivers? And if the answer is yes, do you think it would have made a huge difference in their rise to become what it is today as obviously a global, powerhouse?
Yeah, I mean, not only, this is not a hypothetical, actually. Travis and I had many discussions in the early days of Uber of how to get the drivers involved, just like eBay had tried to do that, and later Airbnb. And the regulations in the United States make it so poor people are not allowed to get equity, but rich people can do whatever the heck they want. And we have a lot of issues in this country around wealth inequality, and it really, I think, even people who may not yet be rich or who are poor, have the ability to place intelligent bets, and we are greatly underestimating people's ability, and we shouldn't. The drivers knew that Uber was going to be a success, and we wanted to give them equity. We desperately wanted to give them equity. That was one of Travis's main thing. But you can't. And you go to your law firm and they tell you, don't do this. You're going to wind up in jail. You're going to wind up in major trouble if you start screwing around with the equity stack. And just watching, I was telling Sahil today, when I watched him do his 506C, I got just incredibly jealous because I was like, Jesus, this kid is like out there raising money. And I was raising my third fund. And I'm like, I can't talk about mine, but he can talk about his. Jesus. And I was like, I told him, and I went to my attorneys and everything else. She's like, you already elected 506B. Please don't do this, Jason. It's unnecessary, yada, yada, yada. And we really need to have a full court press here of politicians, the public, the SEC, regulators, all working and stroking in the right direction here. We've got to paddle in the right direction to get where we want to go as a country, which is equal opportunity for all. And the way the system is now, we are got this weird, patriarchal concept that, poor people need to be protected. Well, as somebody who grew up lower middle class and at times poor, we were entrepreneurial as heck, and we wanted to grow. And, I meet people who are starting their career and they are broke and they want a better life. And then, they would be able to make these bets. I think that's part of the reason why crypto, in its unregulated Wild West way, was so appealing to so many people and captured so many people's attention, because people are aspirational. And it's I loved your point, Ken, about just the private markets being deemed unsafe. I think is a fallacy that we need to really need to correct. My name is Jason Calacanis, and I am done speaking.
Yeah. Thank you. Thank you. So really quickly, Evan, I'll hand it to you in a second. For folks that were wondering, so 506Bs, you have to keep your deal private, and 506Cs, you can really be much more public. So, that's one of the beauties of the rules. And again, we'll ask Professor Ken to give us all the answers. I'm going to open it up for questions in about 5 minutes. We do have some hands already in there, but feel
Slava,
free.
to that point,
Yes.
To that point, what Jason just said is so spot on. If you grow up as a son of a cop, or in my case, the son of a guy who started a lawn service in the backyard, you understand the struggle it is to get just a little bit of investment, a little bit of capital, a loan even, and the struggle there. And so, thank you, Jason, for being a champion for everyday investors, and Ken, thank you for making it possible. What you guys have done is just really incredible. And look, none of this stuff is a R or D thing. Shouldn't be a political thing, but it should be about getting small businesses opportunities and access of average Americans to get ownership of the economy. There's a huge opportunity here. And Sahil, frankly, from afar, I've watched your story and the humility by which you've approached the last couple of years of building Gumroad into what it is. it's gratifying to see that the crowd agrees that you've taken an incredible approach, and it's just humble and incredible and moving to watch. So thank you.
Thank you. I mean, I have a question for you, sort of more on the legislative side of things. Is where do you think this goes? Like, I'm going to be pounding the pavement for the next, I blocked off my calendar to try to convince as many founders as possible to take this route. But where do you think this goes from here? Like, what else can get unlocked on the other side of this?
Well, frankly, for these small openings in securities law changes to this huge movement of everyday investors wanting more access to more products, greater access to a diverse group of products to invest, to really what's happening in the world of crypto, there are these huge moves that are bending towards more freedom and greater access. And I think it's a matter of time for politicians to get with the pace of the average person in America. Frankly, I look at crowdfunding as a way to drive inclusion across those that are born on the wrong side of the tracks and don't have that social network that could give them big dollars. But they do have a broad network that could give them small dollars, a lot of small dollars. So I think there's something that's being unlocked right now with average folks, whether it doesn't matter their party affiliation, but they're thinking in terms of more freedom to take their money and put it to work as they see fit, not as the government wants to limit.
Yeah, and I'm going to get the data on the Gumroad fundraise shortly, but I bet you I have the most diverse cap table in virtually every dimension because I have 7,000 people, of every creed, background, socioeconomic status, gender, age. It's just I think it's going to be really interesting to see what happens when this whole new class of people. I don't know how many new angel investors were minted in the campaign in the last couple of days. I'll have that number too shortly, but I assume it's in the thousands of people, and that's day one of a multi-decade. And so many people were like, "This is my first angel investment," and I love that, right? Like first, first of many, which I think is really important. And I like my first angel investment I made in 2011 in HelloSign, which did quite well for me, and I just lied. I just said I was accredited because I felt like I should have been able to do that. So hopefully, over time, people don't have to make a decision like that.
So just as a reset, we're going to be taking questions from the crowd in a few minutes. Feel free to jump in, raise your hand. And if the folks from backstage are around, we'd love to bring you on to our stage. Sahil, you mentioned that, you're going to be pounding the pavement. What's it really like right now? How many entrepreneurs are contacting you? What are the answers? What are the tactical next steps for some of these folks, and what you're seeing as how this is going to play out in the coming months?
Yeah, I mean, I think there are two directions I'm trying to take it. One is just reaching out to founders who I think should do this. So I'm sort of starting to do that work. I'm getting a lot of inbound. I would say dozens of founders of companies are doing this in the next sort of 6 to 12 months. Ken probably has seen a lot of increased demand too. But I think the other route that I want to explore is like asking my investors, right? Like what's a degree away from Gumroad for these folks? Like what would they invest in? And then I can take that demand to the founder and say, hey, I was only able to raise $5 million. That's the cap. There's plenty more demand for this. Do you want it? Kind of like what I did with Austin's rolling fund. And so I think, I'm not a huge fan of regulation, but I think the bright side is that it sort of lets me, I think, sort of spread the wealth a little bit more. So yeah, just like a lot of tweeting, a lot of being everywhere I can, just telling people that they can do this, that they don't have to actually commit to a crowdfunding campaign. They can actually just test the waters themselves and see, and generally just sharing all the data, I think will convince a lot of people. Because I did not expect it to hit the 5 million max that quickly. that many investors. I was blown away with the rolling fund success too. And I just think over and over again, we're underestimating the demand, but then also I would hope that the power of having these folks on the cap table itself. And so that's the other thing I'm going to do is I'm going to try to build an army. I'm going to try to figure out how do I actually, use these folks in ways that can really drive value to the company and to our creators. And I hope that kind of starts off its own virtuous cycle as well.
So Amy, we're going to open up for you here in a minute. Evan, did you have a question?
Yeah, and I just kind of wanted to build off what Jason was saying, and I want to look at it from a slightly different perspective because, Jason sounds like in his past with the founders that he's worked with, he's been pretty excited about trying to open up the cap table to individual investors. And you've obviously taken capital for some of the biggest names in town. Did you, when you announced or you floated this idea to your existing investors, what was their response? And, it sounds like you're going to go convince or talk to a bunch of new entrepreneurs about potentially going down this route. What kind of, feedback or pushback do you expect them to receive from their existing cap table members? And I think you're on mute if you are discussing.
Wait, was that directed at me?
No, it's for Sahil.
Oh, sorry.
Sorry, could you repeat that question?
The question is really, what was the feedback from your existing investors? You have some big names on your cap table already.
Yeah.
When you told them that you were going to get investors from the crowd, what was their response? And do you expect, all these new entrepreneurs that are going down this path, do you expect them to also have positive or negative expectations around that?
Generally, the trend is the better the investor, the more excited they are about this. The worse they are, the less excited they are about this. So like Naval, for example, was like totally on board. He was like, I'll anchor the thing and you can go crazy. And have fun. And a lot of the other folks were like, this is weird. Like, why would you want to do this? You can take a stake from us, that's effectively free. So yeah, I think generally there's a lot of skepticism in the venture capital community. I saw similar things around rolling funds. I think, when there's a wall that's pretty tall, Jason Fried sort of gave me this really nice line. When there's a wall that's really tall, someone built that wall, and there's probably something pretty good on the inside that very few people can have access to, right? And so like we don't really know what happens when you remove that wall, but I think it's so easy for the people on the inside to say, oh, those people on the outside, like they're not here because they don't deserve to be or they don't have anything to add. But no one really knows, right? Like no one really knows who's on the other side of that wall. I mean, and I think some, definitely have tons and tons of sort of everyday people on my new cap table, but I also have like the people who also invest in startups normally, right? Like I have like Dylan Field from Figma and Sohail from Mixpanel and Mighty and Guggen from Udemy and his new company. And I'm sure there's way more. I just haven't even been able to get into the data yet and see who's actually there. But there's, I assume, dozens of CEOs, dozens of founders, dozens of people who I would have let into a normal round, right? So everyone can participate in this, right? Like it's not anti-VC. VCs are welcome to participate in this too. But yeah, I just don't know where this goes. I think people are like there's limited downside because it's still capital. Like worst case scenario, you kind of raise money and you spend the money and you deploy the capital. Like frankly, most VCs, I've raised from a pretty good list of people. Most of them don't do anything, right? So the bar is not that high for this cohort of 7,000 people to beat them. Sort of value add per check size ratio, I suspect will be quite extraordinary.
Awesome. You have to give credit to Naval. I mean, he's definitely one of the originals going back to 2012 when the Jobs Act was originally signed. That Congressman McHenry was there as well, helping to push it forward. I was there with the Obama administration. We've taken a lot of steps forward, but, Naval's been consistent there and being able to, tie the bow with leading this is awesome. So I want everybody to think about one question right now as we wrap up, which is, where does this head in 5 years from now? What are your big predictions? When you look back to today's Clubhouse, is it going to be a slow growth? Is it going to be massive growth? Is it going to be totally different? I just want to hear people's thoughts. Amy, thank you for your patience. Welcome to the stage. Please be nice. What is your question?
I'm happy to be patient to be on the stage with all of you kings. So especially Jason, I'm always So grateful to you, and congrats again, Sahil. I admit I was definitely one of those founders, pinging him on Twitter at 2 a.m. Eastern Standard Time last night before I went to bed. So what an accomplishment. So my main thing is that we've been considering this for like our late seed round, doing like a partial crowdfunding for quite some time, because we have a really great support of our industry. We're in the wedding, gathering, and group travel space, as well as the consumers. And it's notably higher than like a lot of our much heavier funded other platforms in our space. So we know that it's key to leverage that power behind us. But one of the things that was holding me back, Kendrick, and my question is for you, is just that if we are raising a significantly larger sum than like Republic's previous deals, are you going to offer a tiered fee structure that differs from your current 6% cash and 2% crowd safe that you're currently offering? And we were accepted like a year and a half ago, actually, as one of the companies to be in the Drapers. And we ended up not being able to participate due to logistics. So I'm pretty familiar with your setup. And I think that would slightly scare us away if we're having to give up 6% from, say, a 4.5 million raise. And that's what we're looking to raise right now.
Thank you, Amy. The answer is absolutely. The way that our philosophy at Republic is that, we're so new together with everyone else on this journey. And we're completely open to being pragmatic. And there are new facts and events that come up that we didn't think about before. So things like fee structure, all of those things are meant to be suggestive with limited information. And as the industry develops, as the ecosystem develops, as new partners come to us with different facts and circumstances, one thing that I think, are known for and aim to do better is to be pragmatic and in a way that meets the founder's need. So to give you an example, someone like you or someone like Sahil, the fact that you guys look at retail capital and willing to do the work to raise from your customers, it does so much good for the industry and for the ecosystem. So anything we can do on our part, if we can afford it, to make it happen, that's a much more important priority. It's of a much higher priority for us than bottom lines of being profitable on a deal. We're here for the long run, and I hope that we'll connect separately, and whatever is sensible for you, I'm certain that the team and I can accommodate.
Amazing. I mean, this is definitely something that we were on the cusp of like moving forward with over the next couple of weeks. And literally, I did a happy dance in my bedroom last night with Sahil's raise. So I will definitely be pinging you. Kendrick, is it best to reach out on Twitter or LinkedIn?
Yes, either one. Everyone at Republic is just first name at republic.co. And Amy, if I may add on another component, is that Republic has a lens on inclusion, and the whole industry is about fairness and inclusion. But in many cases, we even commit to provide, the capital, the commission that we earn back to supporting certain founders, particularly underserved founders like, female founders, Black, Latinx, and we've done a bit of it. But as we grow together with the industry, as we become more financially stable, we certain that the commitment in terms of true money putting our money where our mouth is, you're going to see more and more of that. So certainly hope to see you on the platform, and looking forward to building the industry together.
I love that. Our values are aligned. We won Capital Factory's 100K challenge for diversity and inclusion when we were pre-product there at Tech Hub in Austin, Texas. And since winning that, obviously I'm a female founder, but we've made sure to grow our team, always keeping 50% POC and 50% female. So I really like that your values are aligned with that.
Amazing.
Thank you, Amy, for your question,
and
congrats on all the progress. Alexandra, welcome to the stage. I'm excited personally for you. I know you go back years ago to an Indiegogo campaign. Now you're crushing it with your femtech company. Would love to hear what your question is.
Oh, hey. Hi, can you guys hear me?
We can. You sound far away.
Oh, do I sound closer up now?
Yes.
Oh, as you guys know, I know Slava and Evan, and I know Kendrick from afar. I got my start doing crowdfunding with an Indiegogo campaign, and I believe so much in crowdfunding. But I just want to be like frank about the thing that keeps on stopping me from crowdfunding equity, and see kind of what you guys have to say in response to that, which is just that I'm always worried about the perception for future rounds. What are future investors going to think? Are they going to think that, oh, you did this because you couldn't do X, Y, and Z, or raise from venture capital? And will that prevent me in the future? And Sahil, I was just wondering what your thoughts were on that.
Yeah, I mean, sorry, could you repeat your question? Sorry, there's a lot going on my side. What was the
No,
crux of it?
Yeah, I mean, to be honest, I think I'm a female founder in a space that I'm in the sexual wellness space.
Yeah.
So like
I see your Twitter. Yeah.
Oh, cool. So for me, I think, this has always been such a great opportunity because the people are interested in what I'm doing. Crowdfunding has always been really effective for us and go straight to our consumers for support. Yet for us, breaking into the venture capital world has been really challenging. And we recently did that and closed a $4 million round. But before that, I was so close to doing a Republic campaign for so long. And I think the thing that just kept on stopping me, and I think that this, is true from other founders that I talk to, is this perception of what it means to go down this path and what it might seem like to other investors in the future, which I think is so silly, but I also think it might be real.
Yeah, I mean, it's certainly real for shitty investors. There are a lot of those, and sometimes you need to raise from them to keep your business going, right? And we were in a lucky kind of position where I knew that, there's basically no institutional venture capital that we're going to raise. We're going to raise Reg CF, Reg A plus every year until we direct list on the NASDAQ. I didn't have that concern as much. I mean, one thing to note is you can continue to raise this way if you find success. Why not, right? Like, how many 5 millions do you need, right? Like, so I think I think that's a possibility, and you can always switch to a Reg A plus to raise more capital. I think, like, I actually see this sort of path become quite common, actually, where you raise venture capital. Certainly all these, you'll see a variety of all these paths, right, play out. But one that I think will be quite popular is the Gumroad one, which is you raise venture capital. Maybe you don't go through some of the pain that I went through, but then you decide going forward to crowdfund the rest. Like, once you have customers that understand your product, like Uber drivers understand Uber better than Uber might do, and they get it. And I was an early employee at Pinterest, and I remember, like, most of our investors invested in the seed round because, like, their wives used Pinterest, like, how broken is that as a methodology for investing? And many passed too, so I think it makes a lot of sense that, women have 80% of the buying power or what have you. Like, it makes sense that, like, this will enable a huge skew of startups and products to exist and get funded that is going to grow the pie. By the way, like, some of these companies will go, will start hyper growth, and then Andreessen will go lead their round. So it's really going to grow the pie for the top tier VCs. The top tier VCs love this change. It's kind of like rising tide. The rising tide lifts all boats, except for a few that will go underwater, right? But that's I think a good thing for the industry. But yeah, I don't know. I wouldn't worry about it too much. And I think one of the reason I structured the Gumroad fundraise the way that I did, with Jason Fried and Naval, is I wanted to show people from two very distinct communities that they could co-invest alongside these kinds of people, right? Because I really wanted to sort of add more legitimacy to crowdfunding. I often heard the sort of lemon problem, what SPACs were dealing with quite frequently, before Chamath and Virgin Galactic. How did that problem get solved, quote unquote? It's because someone with a pretty reasonable reputation, and certainly among retail investors, maybe not even insiders, he was able to go direct. He would put real skin in the game, put his money where his mouth is, and I try to do kind of something similar with Gumroad. So I think that will be another model. It's like all you have to do is convince one person who's legitimate, has an audience. By the way, Slava, I know you asked a little bit about how am I going to pound the pavement exactly? Like I have a rolling fund, right? So I have $12 million a year that I can write checks for. And I don't need to take my 20% allocation. I don't need to take 5% allocation. I could take 2%, 1%, and I can give the rest away to Reg CF. And I have an audience now, at least 7,000, probably a lot more than that, who want to do stuff like this. And so that's part of what I will do is I will pick founders, I will invest in their companies through my rolling fund, and I'll say, cool, like let's take this to the community, let's raise money from the general public. And especially if I come with data that shows that like, wow, Gumroad literally overnight is growing faster because of this move that we made, my guess is founders are going to be really receptive to that. And I would love to see every venture round include this, built it to the model where you raise 10 million Series A plus 5 million or plus 10 million. Or 1 million plus 10, whatever the numbers are. I really think that these things are going to collaborate a lot more than maybe people may think.
Yeah, I would completely agree. Equity is the ultimate loyalty, and if you can't raise $1 million as part of a carve out, as part of a 10 from your customers, you obviously don't have the traction yet. I mean, different raises need different infrastructure built. But it definitely says something if you're unable. So it's a great litmus test, and I think we might see that evolve over time. Alexandra, did you have any other follow-ups?
No, I'm just so inspired right now. Thank you guys so much. I'm really excited to see this part of the ecosystem grow.
Well, I really believe this lemon problem, especially with testing the waters now live, like will get solved really, really, really fast. All it's going to take, and one of the other reasons I priced Gumroad at what it was, 100 million. Now that I'm not fundraising anymore, I can say that I think that's insanely cheap. That's 8.5x revenue multiple. My guess is we're going to be able to raise money at a much higher valuation soon. And I want to show people like that this thing works and it works really quickly. And I think that will drive a lot more interest too, because I think you just need more success stories, right? Like you need the Oculus for Kickstarter. You just need more of those to reach a different groups of people every time. And over time, it'll be normalized, and then people won't ask me anymore like, hey, I want to put money in, I live outside the US, can I invest? Like I get all of these questions. Like I don't know, I was pretty clear, I thought, in my tweet thread, but I literally got hundreds of messages from people being like, can I invest? Only $100. Can I invest? I'm not accredited. Can I invest? I'm a student. Can I? And I'm like, literally, as long as you're not in Ontario, Canada, for some reason, thanks to the Ontario Securities Commission, you can basically invest in Gumroad for $100, no matter where you live, no matter your net worth. I don't care. I don't care who you voted for. Doesn't matter to me. I want everybody in. And so I think it's going to take a lot of that. It's going to take a lot of teaching people until people realize, oh, I can actually angel invest in like high quality, top tier startups. Most people don't know that Zenefits has raised money via crowdfunding round, Robinhood. Like, there are a lot of actual success stories. It's just the founders generally aren't as loud and proud as I am. Vlad is not maybe as good as PR as I think I might be able to be. So I think it takes that kind of person who's a little bit annoying, frankly, a little bit like Jason, thanks for the inspiration, to really educate people. Jason educated people about syndicates back in the early days, and it takes that, for that kind of, I think, narrative shift to kind of happen, and I think it's happening, and it will be a switch. It will look back, and it will have already happened. It would have happened now. It would have happened later. We're not going to know when it exactly happened, but I think that switch will happen soon if it hasn't already.
Thank you. So, Congressman McHenry, I promised you'd be done by 9 for your commitment. I'm sorry that we're 4 minutes late here. You're welcome to stay as long as you want, but I just wanted to make sure that if you'd like to say any final words, as well as any predictions for 5 years out, the stage is yours, sir.
Well, no, Slava, thank you. And look, I think what's fascinating to me is how one little opening and one little slice of freedom for individuals to have a little ownership stake has brought a bunch of different people together. That's how I met Slava years ago. I guess 8 years ago at this point.
Yeah, 2011.
Yeah. And this is also how, Ken, I met what predated Republic, which was Angel List, and what Naval was putting together, his genius approach to Angel List. But the idea here that has taken hold among investors, and I mean average everyday people that have a little bit of savings, is that they want to have greater ownership. I think the key is to push that in a methodical way on the elected class, if you will. So at the state level, your state reps, your state senators, members of Congress, members of the U.S. House, state level, the federal level, that we continue to push a broad agenda that opens up investment opportunities for more people. And we also remind the elected class that average people are smart. So to have just a net worth standard on whether or not you can be an accredited investor is a silly rubric. And what we have to do is get more people having greater investment opportunities in order to have a greater deal of financial inclusion, so that people have more ownership of the economic upside of our great country. And so that's really my motivation. And it's an honor to be a part of this conversation. I would love to keep the conversation going. I'd also love hearing new ideas. That's what has made Clubhouse so great for me, is to be able to listen in on these great conversations and learn something. It seems like Washington in the last few years is a way to get dumber, not smarter. And so Clubhouse and these relationships I've been able to build of the investing community and the technology community have really made me smarter and better as a policymaker. So thank you for that, and would love to continue the engagement. Would love to hear the ideas as well that are sparking off out of these conversations. So thank you.
Thank you so much, Congressman. Having you here has been great. Obviously, you're part of the marquee. You can stay as long as you'd like. But just as a reset for everybody, I know some people have been joining more recently. This started at 8 o'clock. We're talking about the rule changes for equity crowdfunding. We have some of the amazing players on stage, and we're headed to David for a question. So, David, I'm going to kick it over to you now, if you can unmute.
Thanks, guys. I have a lot of friends on the stage. Sahil mentioned SPACs. I'm on my third SPAC as co-founder and COO. So I agree 100% with you, Sahil, in terms of turning lemons into lemonade, for lack of a better word. My question is more tactical around crowdfunding. Where do you see two questions? One is, what stage do you think makes most sense for the new cap? And two is, will you see crowdfunding in some of these larger kind of rounds where somebody like an Andreessen or a Sequoia might lead a round and the rest of it, or 5 million of it, is crowdfunding? Thank you.
Yeah. I mean, I think stage-wise, I think of it, it's not too different from traditional venture, where you want to just make sure you're diluting a certain amount or not. And, if you plan to raise 5 million, you just have to be you just have to kind of pick a price that gets you the sort of the cap table that you want. So my guess is this is going to really open up the door to sort of like, I guess at this point they're called seed rounds, seed round or Series A kind of companies. Gumroad is kind of an example of maybe the latter. But I think even the earlier stages, you'll start to see that collaboration between traditional VCs and retail investors. I think the institutional VCs that figure this out, like Andreessen has added so much value to Clubhouse by bringing in creators and bringing in tons of influencers and celebrities and all sorts of people outside of sort of the Silicon Valley bubble. And I think if people can figure out how to do that and also build equity and ownership into that, I think it's sort of innovator's dilemma, right? Y Combinator and AngelList were the ones that had to do this innovation, not the traditional venture capitalists that have been around since the 70s. And I think it might be similar. Maybe the next Andreessen is the one that gets built embracing this, right? It's very hard, I think, for traditional people who are, you're used to getting your 20% ownership to say, actually, they don't even give their ownership to founders and CEOs who want to join the cap table. I have to kind of squeeze in sometimes if I can at all. So I think the new investors who care less about allocation and are willing to sort of like broaden the pie a little bit, I think will do really, really well. And if they start to see those returns, then the LPs are going to move in that direction, and the founders will too. And it'll be like Y Combinator, where in 5 years went from like this totally weird thing to like the premier signal in Silicon Valley and in the world, really. So I think it can happen quite quickly.
Thank you.
Thanks, David. Ram, I believe we have you in the room.
Hey guys, thanks for getting me up here. Sahil, congrats on a great result with your company. I wanted to ask the panel's views on how an issuer under Reg CF or Reg A Plus can keep the marginal cost of acquiring investors, or in other words, the cost of distributing their offer down as much as possible. Sahil, you have this amazing platform on social of acquiring a new investor effectively.
Ram, I think we're having trouble.
For my business, when we went down the road, this week we failed to succeed it.
Sorry, Ram, I think we're having trouble hearing you. So if you could just try to get to a better place. In the meantime, I'm going to set up Kingston for a question. So Kingston, if you could unmute, Ram, if you can mute, that'd be appreciated. Kingston, go with your question, please.
Hey, thanks you guys for getting me up to speak. Just say congratulations to Sahil first. Great job. I just started my coding, like career through Gumroad, Austin, Texas. I'm in New York City right now, and Jason, thank you for what you've done out of Fordham University. I'm a Fordham grad, so it's kind of cool to see another Fordham alum, do so well in the industry. So congrats on that. But Sahil, I just want to ask you, what was the marketing preparation? Was it like an extended process to get the word out, to get something like this done?
Yeah, and I plan to. It's a great question. I think I plan to sort of write this up and give founders a playbook so that they can really copy paste as much as possible and change the company name and they're all set. But the first thing I did is I emailed I have an email newsletter, so I emailed those folks, said, hey, I'm thinking about raising money for Gumroad. Please don't tell anybody. But fill out this Google form if you're interested. And one of the options there was like, I'm 100% in, no questions asked. Like I wanted to know, I wanted to know that these people were in, not that I was going to have to like pitch them or anything. Right. So I let people kind of self-select that. I got, I sent out that email to my email newsletter. And within around an hour, I had $5 million in commits. Within the first 48 hours or so, I think I had 20 million, and then I did the same thing with the Gumroad email list. I emailed all the top Gumroad creators and said, hey, you should tune into this next Gumroad board meeting if you're interested, collected demand that way. So by the end of it, I sort of going into it, I had around $30 million or so worth of like interest via the Google form. So I knew that this round was going to happen. I was basically testing the waters before it was actually allowed. So now basically what I did, everyone should be able to do with their lawyers opt-in. And so, I did that, and then, I picked a date. I worked with Republic, set up the campaign page, had it ready to go. We picked March 15th because it was basically the soonest we could do it, and we thought it would be a good moment to kind of just share the news and show people an example of this in motion, and that was it. Honestly, like I didn't have, I tweeted it out. I just tweeted out a Republic link. I set the max check size to $1,000 because I knew that there was enough demand for this. I wanted to make sure that everyone could invest if they wanted to, as many people as possible. Unfortunately, still wasn't able to make that happen. But that's really it. I tweeted out the Republic link, and then Republic did all the hard work for me. And I would say the other thing I did was I've just been really open and transparent about Gumroad this whole time, right? So like sharing the financials monthly and these sorts of things, doing these open board meetings, like it allows people not just to get familiar over time, but it allows people who are deciding to invest now, they see a paper trail of like, okay, this isn't just like a random thing that's happening, right? Like they can kind of read my blog posts and really get a sense of things. And I think that's also really important. People want to feel bought into not just the company. And there are lots of tweets that are like, I'm not just investing in Gumroad, I'm investing in Daniel Vassallo, who's awesome and works at Gumroad. And, so I think really, people care about people, right? Not companies. And so I think the more that you can share your story, the better you'll do. And even if, I would tell every founder, even if you have zero, desire to ever do a crowdfunding in your life, you should be doing these things. You should be building a business and building an audience and doing these sorts of things. And then, you never know what, I had zero plans to do crowdfunding round until I saw that rule change, I think in November of last year. So you never, and I didn't plan to be a VC until rolling funds happened, so you never really know what unlocks are going to happen, either tech wise or regulatory wise, legislation, et cetera, that are going to make what you want to do possible. But I do know that the better your business, the smarter you are, the more prepared you are, the larger the audience you have, the more trust you've built, the more positioned you're going to be to take advantage of whatever those things are.
Okay. Yeah, Winston, thank you for that. I also want to thank you for, you were the first CEOs to ever give me feedback on our fundraising pitch deck, about a year ago. So I want to thank you for that. And I did invest, in the company in Gumroad on Republic. So, and Kendrick, I want to thank you too for opening this door, for people like us to invest. I remember when our Republic came to Fordham University's Lincoln Center campus, about 2 years ago, and I didn't think it was going to come this far. So, great job on that. Thank you so much for you guys. Yeah.
Oh, thank you, sir.
Thanks, Kingston, for the questions.
Thanks. Awesome.
Kendrick, I actually have a question for you, which is, 2020 was a pretty big year for equity crowdfunding, hitting about $250 million in volume for the entire industry. What's your prediction, given the continued growth and now these rule changes? I want to hear a number from you, Kendrick. What's going to be the industry aggregate result, in your opinion, for 2021?
I think 2021 is going to be over 1.2 billions, and I think by 2025 it should get to 20 billions. Obviously, very speculative out, but Slava, I'm down to put that one ETH that is going to cross 1.2 billions for crowdfunding for 2021.
Wait, did I just say you're putting down one ETH?
Exactly.
Is there a taker on the other side?
I can only take two.
Unfortunately, I don't think there's any takers. I think we're all on that side of the bet.
That's significant growth, just so everybody understands.
I'll take the bet. It's a hedge. It's a hedge on my own.
So we heard it here first. So it's a hedge. So Sahil's playing both sides. He has become the market maker.
And Slava, if I may just add on a comment to, what the Congressman and Sahil said, it's just right on point. And I think when it comes to equity crowdfunding, at the foundation of it is about fairness and freedom, right? And with retail capital comes that marketing value. Any company that's consumer focused, that has the need to market itself to the retail public, doesn't matter if it's a pre-seed, pre-product, or pre-market, all the way to Series D, E, F, you can leverage this very, very unique marketing tool. So that's why I think over time, not only that founders will come to see this in a very, very, as just a way of doing marketing, but I think investor and more particularly customers will come to expect it. And so that alignment and expectation will naturally drive the maturation of the industry. And I think it's just people would look back and be like, why was that ever controversial? Controversial in the same way that we now think about recycling in a way that's just, normal. And 25, 30 years ago, that wasn't the case. So I can't be more excited for the future of all this.
That's incredible. I just want to put it into context. So it was about 250 million in 2020, which was already a big jump from 2019. Obviously, there's the COVID tailwinds, and now you're predicting 1.2, which is bold and amazing. With my investor hat on, I asked how much of that growth is more customers versus how much of that growth is an increase in AOV or the GMV per campaign because of these new rules.
I think it's both. I do think that the number of companies that are mature and can truly raise all 5 millions in capital you probably have less than a dozen or two, and even then this year, I don't know, I think the entire industry there should be less than 10 or 20 $5 million campaign. But I think overall people just know more and more about it. It's not that Sahil's Gumroad campaign necessarily will result in 50 $5 million raise. No, I don't think so. There aren't 50 companies like that out there. And obviously Sahil and Gumroad are very unique. But what it does is that it put this method of fundraising on the radar for businesses large and small. And so you may have 20,000 or maybe 2,000 small businesses that didn't even think about this. They didn't think that this was credible. And now they look at Sahil as an example and go and raise $200,000, $500,000. And I just want to press a point that a company can start, a startup can have the first step with $50,000, $20,000. You don't need $5 million from day one. And so I think the market and the potential for this industry to expand this year is based on the awareness and the number of deals that now will take advantage of it. Not necessarily the number of $5 million raises. Certainly not in 2021.
Awesome. Thank you, Kendrick. I appreciate you taking my diligence questions. So next, Ram, let's try it again. Hopefully your voice will come through a little bit better. We're all holding our breath.
Thanks, Slava. Is that better? Can you hear me?
Yes.
Great. So I just wanted to ask, the question was around, for the panel was around keeping the marginal cost of acquiring investors, or in other words, the cost of distributing an issuer's offer down as much as possible. Sahil has this amazing platform on social and Twitter, and others potentially that makes his marginal cost of acquiring a new investor effectively equal to zero. What I found was that for my business, when we went through the process, getting that down was key to whether we actually failed or succeeded. For context, I did a Reg A Plus Tier 2 for my beverage startup back in 2019, which was eventually pretty successful, but only after we figured out how to get low-cost distribution. We actually did it outside of a platform like Kendrick's and yours, Slava, because we actually didn't have an active social presence to leverage. Eventually, my average investment was around $2,200 per investor, and my distribution cost was effectively down to zero. But at one point, we were about 4 weeks away from insolvency after a very painful experience, where before we figured out how to get that distribution right, our marginal cost of acquiring a new investor was around, or actually probably the same as, or higher than our average investment size. So how do you guys think about getting that equation right for new companies that want to go up and do either a Reg CF or Reg A Plus or some combination thereof? Thanks.
Who would like to take that one? Kendrick, is that for you?
Yeah, I definitely can take this. And if I understand the question correctly, is it about new companies looking to do this and want to potentially mitigate or reduce the so-called distribution cost? Ram, the way I look at it is that fundraising, you got to pound the pavement, whether it's on Sand Hill Road or virtually. And the work that Sahil, in this case, had put into it, as a prelude to the campaign, I'm sure it took, many, many, many hours. So there are two ways of looking at it, and marketing is the same way, which is you can leverage your customer base, your network, manually with the team's effort, 20 hours a week, and do it for 3-4 months. And or you can use that money to, I'm sure there are a lot of agencies out there that offer to market the campaign. At Republic, we're always an advocate of founders and the team leveraging their own personal network and their customer base. Because at the end of the day, if you cannot convince your own customers, your friends, your family, ex-boyfriend, girlfriend, or whatever from 20 years ago to believe in you, to invest $20, relying and paying money to rely on random strangers through Facebook ads seems suboptimal, to say the least. So I don't necessarily think the distribution cost needs to be that high if there's adequate preparation put in place. And that's why testing the waters, this new feature of the SEC rules, is so crucial. You can test out to see if your fans, your networks, your customers take interest in potentially investing. And if they don't, think twice before running the campaign rather than spending a lot of money on marketing to random strangers.
Yeah, just one thing to add to that, I think, is like you can use testing the waters in collaboration with some of these distribution channels, right? So you can now work with, instead of working with an influencer to promote your crowdfunding campaign once it's already set up and you've spent all the money to do it, you can actually you can partner with them to test the waters together, right? And then you can commit to saying, okay, if we get this much in demand, then we'll do it. So I think it's gonna mitigate the risk, I think, in exploring those alternative sort of distribution channels as well. And that's what I plan to do, right? Like I don't plan to tell a founder, hey, we got to do this crowdfunding round. I plan to say, hey, can I tweet about you and ask people to fill out a Google form. And if you split it up like that, then the conversation becomes like, I don't know, it seems much more reasonable to say, let's have a conversation about this company and vet everybody's interest. And then you know going into it, like I knew waking up on Monday that this round was going to happen. I didn't have to I wasn't staying up all night worried because I had already pre-qualified so many people. And I think that's really, really important to do. And I think we'll get a lot more people acclimated to doing this.
Thank you for the question. So the room is growing, which is exciting. So I'm just going to do a quick reset. Ashley, we're going to come to you for a question in just a minute. We really have some incredible people in the room. Congressman McHenry just dropped. He committed to stay till 9 o'clock. So very excited to have had him longer. For those of you who missed him, he's been working on the Jobs Act and all these changes for equity crowdfunding for a decade. And seeing the results and the new adoption yesterday is really incredible. We have Kendrick in the room from Republic, CEO and founder, and just really seeing a wide variety of entrepreneurs raising on his platform. And one of those entrepreneurs is Sahil from Gumroad, who successfully yesterday raised $5 million from over 7,000 investors in about 12 hours. So just resetting the room. Thank you, everybody, for still staying and joining more recently. Ashley, what is your question?
Hi, so thank you guys so much for an amazing conversation. So I guess this question might have been better aimed at Patrick, but I was wondering if you guys foresee secondary markets for crowdfunded equity being legalized in the near future.
The answer, Ashley, is a resounding yes on our side at Republic. We hope to be able to introduce that later this year, but we're working actively on that.
Ultimately, the founder person. Yeah, sorry.
Go ahead, Sahil.
Oh yeah, just the founder perspective on that is like I will enable liquidity for Gumroad stockholders as soon as the 1-year lockup. So March 15th, 2022. There will be liquidity for anyone on our cap table who wants it.
Thank you.
And do you have, Sahil, a specific plan in place of how to do that liquidity?
No.
All
but
right.
it'll happen.
Perfect.
Me and Ken need to talk a little bit more, but it's the thing I am most excited about. Is this new wave of liquidity and secondaries for these investors. Frankly, I think it's going to increase the price of the company quite a lot, and it's going to basically lead to price discovery, right? Like basically, I can have a liquid stock price pre raising more money at a fixed price. So I'm pretty excited about that.
Yeah, absolutely. I mean, at Vincent, we're seeing a view across all alternatives, with equity crowdfunding being one of those verticals, with things like real estate, debt, collectibles, crypto, etc. And we're really seeing the secondary markets fueling the growth of these verticals. I mean, the obvious one is crypto being open 24/7 and having that liquidity, and you're really seeing that with trading cards. The fact that Michael Jordan in the past was just being able to trade on an eBay every now and then, and now you're seeing fractional ownership with secondary trading for that. It's really exciting, and the more we can get to those liquid markets for the equity crowdfunding, absolutely. I do have a question though related to that, Sahil, because price discovery seems nice if your company is crushing it. But like any, bad public company or a SPAC that goes sideways, the price discovery could be really painful for an equity crowdfunding company, that starts getting secondary traded at a really low price. Kendrick or Sahil, what are your thoughts on that?
Yeah, I'll go first, and then I'd love Kendrick's thoughts too. I welcome it, to be honest. I think a lot of people have said this about the public markets. It's sort of short-term thinking, but I think 2020, 2021 has shown that like maybe the markets are actually like better at predicting at future success than sort of Wall Street sort of Silicon Valley insiders maybe. I think emergent behavior of the crowds is quite powerful. So I think maybe the company deserves, if Gumroad goes to 50 million in a year, it probably deserves to. Just like my rolling fund, like people can decide to leave if they want, and that's great. You should be able to cancel your Netflix subscription. The easier you make that, I think the more accountable you will be to making sure your product is actually really good. And I generally believe that maybe if you do have a down month or a down quarter or what have you, it's your job as a founder operator to educate your investor base and say, hey, look, this is the kind of company we're building. This is what the returns kind of we think look like. And I think as long as you set expectations, like I think generally you'll be pretty surprised. And I think anyone that there's a very limited sort of supply of these shares, and there's a lot of demand for them. So I think generally you're going to see a lot more upside than downside. But certainly you will see some downside as you bring more liquidity into it.
If every founder is like Sahil, would make our job at Republic or our life far easier. But Sahil is unusually formidable as an entrepreneur in his ability to navigate the venture ecosystem and optics and all of it. For most founders, I do think that the concern that, hey, if Republic is going to launch a secondary market or a pricing index, and it shows that the value or that investors or customer are betting against or like shorting the value of the company, that probably would be a deterrence. So we're in the early phase of mapping this out, but we probably would not make it so public unless a founder really would not care. Otherwise, we probably would want to limit it to our own community and those who had already had a position in a company and therefore can talk among one another, but it's not a public piece of information that perhaps an analyst at a VC can just pull it up in a due diligence, a process down the road, assessing a Series A or Series B, and ask some unwarranted questions or making unwarranted assumptions. But navigating founders' concerns is certainly a crucial part of us ideating and building this product.
Great. Ashley, did you have any further questions?
No, I just want to say thank you so much for those answers. They were great. And I can just say from somebody who is really interested and likes using equity crowdfunding apps, I think that's something I'm definitely looking forward to. So thank you.
Okay, great. Krishna, we're going to be coming to you in just a minute. So for anybody in the room, if you have questions, please just tap the hands up to get yourself in line. We'd love to hear from you. And Krishan, what's your question?
Great. Hey, and thanks a lot, Slava, for calling me up here. I'd just like to take a quick second to thank you and Kendrick for the great work you guys have been doing. I have personally been involved in the crowdfunding world since 2012. And just a quick background to the context of the question. My team and I have done a little over $100 million through our crowdfunding campaigns. We sort of shepherd founders, put them with the right platforms. Kendrick, we have a couple of campaigns live on Republic right now. Slava, we've had some big bangers, 7-figure campaigns on Indiegogo, and we're hyper focusing on equity crowdfunding right now. I have personally seen the growth before the $5 million regulation in the industry. And we have over 30, 40 campaigns live right now across all the platforms. My question for Kendrick and Slava, you two specifically, is do you potentially feel there is a path for the $5 million threshold to be increased higher for the Reg CF campaigns? Because when we were running campaigns pre the 5 million cap, we saw a lot of companies that needed to raise more capital either go the Reg A plus route or go the institutional route or the angel syndicate route. Now with the $5 million increase, a lot more mature stage companies are coming involved in our deal flow pipeline, companies that have raised a tremendous amount of capital valued at 50, 70, $100 million. And do you think there's a path for this 5 to get to 15 or 10 in the near term future, Kendrick or Slava?
Krishan, allow me to take a first stab at that question. I really wish that Congressman McHenry is still on the call, because obviously for something like that to change, that means the cap getting increased furthermore. I do think that the next step probably would require congressional involvement. But if you look at the UK or in the cap for crowdfunding, there is $12 million, give or take, foreign currency exchange rate. And in Australia, I believe is at 8 million. And the next thing outside of Reg CF is Reg A, and that's 75 million. So there's a big gap between 5 and 75. So there's definitely room for the cap to go up further. Am I optimistic you're going to see that in the next, 2 or 3 or 4 years? Probably not, but in beyond that, probably so. Slava, I wonder what your take on that may be, having been involved in all of this since day one a decade ago.
Yeah, I mean, just to give you a little bit of a timeline, people start working on it in 2011. It gets signed in 2012. It launches in 2016 with a 1 million cap, and it gets passed to a $5 million cap, several months ago. And now it is a $5 million cap about 4 years after it became a $1 million cap. Typically, it takes a few years for there to be a review, and then you need to assume that the review would then determine that there should be an increase. Let's all assume that that is true. I'm guessing that the over-under on this is about 4 years for the date to go up. You probably would get some good bets on both sides of a 4-year over-under. So very specifically, March 2025, let's look out for that date for potentially, let's call it an 8 million or a $10 million cap.
Yeah, thanks a lot for that. And, this is probably the only time I'll ever say this, Kendrick. One point that I did personally disagree with you is you said there's going to be about 10 to 15 campaigns that might raise, the full 5 million. As Republic is doing such amazing work, and Sahil, congratulations on such a successful campaign. Within our ecosystem alone, Kendrick, as the cap got raised to 5 million, we had about 5 or 6 oversubscribed Reg CFs that had already raised the 1.07 plus. And now we're filing, the next wave of traffic and movement to hit that. So we at least hope to be, 5 or 6 contributors to that movement. And I hope there's so many more than 10 to 15. I know you were just joking, and so am I, but, looking forward to this amazing growth led by, you and Slava and Sahil and other pioneers in the industry.
I sure hope so as well.
All right. Thank you, Krishan. Ethan, I'm going to come to you in just a second. So feel free to unmute. But just as a reset, we're talking equity crowdfunding and the changing rules. We've been at it for over 90 minutes, and everybody is still awake and doing well. So for those of you in the audience, if you have questions, please raise your hand. Ethan, what is your question?
Thanks, everybody, for taking my question. My question is, when will equity crowdfunding finally take biotech by storm? And anyone who says that $5 million can't get you to first in human proof of concept doesn't know what they're talking about. So I'm just wondering, what's it going to take for sort of biotech to catch on to this equity crowdfunding trend?
Well, we definitely have had biotech or companies in the medical space maxing out at the old cap at 1.07. So I have no doubt that you're going to see biotech startups raising at all the way the 4-5 million amount, taking it by storm. That's only time will tell, Andrew. I'm not sure that we have done enough biotech deals for us to have any data point to be predictive about that.
Thank you for the question, Ethan. So some of the folks in the room, they see raising 5 million from the crowd, and they want to hear from the man that just did it. Sorry to ask you, Sahil, to repeat yourself, but we're going to go back to some folks that maybe are new to the room. Are you ready for a question, Sahil?
Yes, I am.
So $5 million from over 7,000 investors in 12 hours. You know, the easy answer is all you got to do is work for a decade, build your revenues, be engaged on Twitter and social and have everybody love you. But for everybody in the room who can't just snap their fingers and have that, how do they learn from your playbook? What can they do in the coming months and in 2021?
Yeah, I think this is a long game. I'm excited for the cap to go up to 8 to 10 million in March 2024. I think it was 2025. 2025. Cool. Good to know. I'll put it in my calendar. I think testing the waters is a new provision that has gone live, so people can now sort of test the waters and gauge demand. And I think people should think about how they can build that into their workflow and how they can build that into their product, into their email onboarding campaigns, into their social media. I think communicating that this is something you want to do in the future. You don't have to commit to doing it tomorrow or in a month or in a year or ever, but you can say, hey, this is something that I would love to do if I have enough demand from my customers, the people who really understand my product. And my guess is, you may be surprised the demand from the average person to invest in alts and early stage technology companies is insanely high. I don't know how much demand for this round, but it was certainly more than 5 million. We raised that with a $1,000 maximum check size. We probably would have hit the limit in 12 minutes if we didn't have one. I think there's a lot of demand, and I think I just want to make sure people understand that you may be underestimating the people around you. You don't know who in your friends and family and your network and in your past and your past colleagues, former bosses would be interested in supporting you. And the minimum check size can be quite small. It can ours for our campaign was $100. So virtually every single person I talked to in my life was a yes, because it's $100, right? Why not? I think, I sort of encourage people to start thinking about it, even if they're not ready for it. You can start collecting demand, you can start learning. I think it's a lot better to, start then learn than, learn then start generally.
Great. Thank you. Andrew, we're going to head to you here in a second with a question. So if everybody wants to, feel free to join with your hand up for any additional questions. Andrew, what is your question?
Yeah, so my question was for Kendrick. I'm really interested to see what your approach has been in Ontario, Canada. I was pretty surprised to see that investors in Ontario can't participate in Republic.com. I'm lucky. I actually just moved yesterday morning to Sydney, Nova Scotia, so I am now an investor. So thank you for that. But it seemed like it was a request from the Ontario Securities Commission, not a demand, not any specific laws in the books that would prohibit you from doing it. But obviously, you're taking a very cautious approach in dealing with that regulator in that specific jurisdiction. So how does that sort of inform your general approach to regulation and how you sort of deal with the regulatory requirements that are pretty burdensome, and how you see that going forward?
It's a great question, Andrew. You touched on that point toward the tail end, in that everything that we do, obviously, is heavily regulated. So the concept of securities offering, that's regulated in every single country, as far as I know. So let's say in the case of Ontario or Canada, when a Canadian resident passively coming to Republic, finding it out on his own or her own, and investing, technically we're not, marketing ourselves or operating in Canada, so to speak, and should be outside of the jurisdiction of a Canadian authority or Ontario authority. But that's just a view. It doesn't mean that in this case Ontario SEC, wouldn't or cannot request that, hey, why don't you come and apply and get licensed and operate here? In fact, we were extended an invitation to do just that. Now, Republic itself is a startup, so one of these days we are going to undertake the effort to expand our business into Canada and Mexico and France and the UK and beyond. For now, we're not yet able to do so, and it's not a prohibition. It's just a dialogue with Canadian authority that we decided, like, hey, we know that sooner or later we are going to engage with a northern neighbor, and therefore it's best for us to just, stay in the good grace and have that conversation later on. And that's the dynamic that we need to take into account with respect to every single country in which there are people investing on Republic, and particularly if we have plans to have our own staff being there, that's when we have to be even more cautious. So the global expansion plan for equity crowdfunding is a jurisdiction by jurisdiction play. It's much more difficult than, say, even more difficult than, say, Uber or Amazon, which are regulated, but far less so. I hope that answers your question, Andrew.
It was, and I think that, to me, the cautious approach you've taken gives me more confidence in Republic and your future plans. Like, I was really excited to invest my $1,300 Canadian dollars yesterday morning, and I'm even more excited to, once you're here, hopefully in enough time, to leave a portion of my fundraising for Crowd Safe. So thank you so much for that.
Amazing, thank you.
Just to add to that, I mean, one of the reasons I love working, actually, not past tense. Give me my money, Kendrick. Just kidding. Is just, I kind of move fast and break things a little bit. And so having the Republic team and Kendrick specifically coach me has been really, really helpful in making sure, like, I just have 100% trust that, like, I'm not going to do anything stupid, because I can always ask the team there, how I should be thinking about something, what I need to disclose, how I should message something. And it gives me a lot of confidence to do kind of the stuff that I do, because I know that all of this stuff has been vetted by lawyers that, frankly, I'm not paying for. So I really, 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 really appreciate that.
Great. So thanks, Andrew, for the question. Steve, we're going to be going to you next in just a minute. So if you can make sure you're ready. For everybody in the room, the folks that we have on, Sahil from Gumroad.com, Kendrick from Republic.co, and myself from WithVincent.com with your view across alternatives. So, Steve, are you ready with your question?
Yeah, no, thanks for having me up here. And Sahil, congratulations on the raise, and look forward to the Notion-based build out of how you did it, just like you did with the investor stuff, with the normal traditional raise stuff. So I'm kind of curious with the increase here going live yesterday. We've been waiting for that and putting together our plan now. The people that don't have the full valuation, that can go out with $100 million valuation and be, legit about it. Curious how that changes things with, typically we measured crowd equity in single digits. Most founders were looking at that like that would be a single digit percentage on the cap table, if you're in a good enough valuation percentage there. Now, with a $5 million max, I mean, we're talking, $25 million valuation, getting it closer to like a Series A, like a 20% equity or so. So just curious how, balance that's going to be from, getting founders to, does it step up, what they're trying to put their valuation at, and also protecting the investors from the side of not having overvaluation on the platforms.
Should I take that? I mean, I think the 20% is a good barometer. So I do think sort of that $25 million valuation is a lot what we're going to see. But, you don't have to raise that much capital. I think the beauty of taking this approach where you're raising from individuals is that no one has an allocation target like VCs do. And so I think you'll actually start to see a lot of rounds that, the cap went up to 5, but you're going to start seeing 1.5 rounds, $2 million rounds, $2.5 million rounds, et cetera. Even Gumroad, maybe strategically, it would have made sense to raise $2 million and then raise $3 million 6 months from now, at a higher price. But we wanted to come out pretty hot out of the gate. But I think there's going to be a lot of interesting finagling around this sort of stuff to play with different models. But ultimately, it's not too different. It's not too different from raising traditional venture. You kind of come up with a valuation based on what you think the market is currently paying. You can run comps and you can kind of get a pretty good sense of things. I think these days there's enough data out there, and then you just say, look, this is what I think is fair. I think in an ideal case, you can actually get it priced. You can actually get a credentialed person to write a check. So at least you can say, hey, this person agreed to it. I think that helps a lot. That's part of the playbook. Part of that Notion doc I'll be working on soon is ideally you find a quote unquote a lead, a top tier sort of, for me, that was like Jason Fried, Naval, et cetera. I think that approach, I hope, gets copied. And I hope that, kind of like what Ken and other folks have said, like ideally you have customers who are really bullish, and ideally you have somebody in your network who's credentialed in this fashion, and you only need one. The one more thing I'll add before I'm curious what Chuck and Kendrick think about sort of the pricing question is you can ask the platform for help, and so talking to Republic and stuff, it's like you can get a sense of like what are they seeing, and so they can help you, I think, come up with a price as well.
Chuck, head the crowdfunding portal at Republic, and Chuck, would you mind taking this question? You're much closer to it than I am.
Yeah, no problem. I actually do have a real question for later too. I'm always learning myself, even though I've been with Republic since the beginning. On valuation, yeah, we certainly have a discussion with every founder that comes our way through applications and diligence, and while they're onboarding, it's a pretty constant discussion, and we try to find that happy place that makes sense, that can be justified, and that is investor friendly at the same time. So it's it is a moving target. It is not the same for every deal. We don't try to cookie cutter anything or stamp anything. We have a relationship and a partnership with every one of these founders, and we have a discussion. We have a real discussion. So it comes together in a lot of different ways, but I think that's a very positive part of investment crowdfunding and the time that it takes to go through diligence, to onboard, to navigate the regulations, to do your financial review, et cetera.
One thing I plan to do, and then I picked 100 million just because I thought it was nice and round and fair. But you can ask. Testing the waters is now live, so you could literally say, hey, I'm thinking about raising money at via this method. We'll raise between $1 and $3 million. This way, we think based on what we see. If we raise at a $10 million valuation, how much would you want to commit? If we raise at a $50 million valuation, how much would you want to commit? If we raise at a $50 million, I mean, by the way, this is what I plan to do for Gumroad anyway. In the next, at some point in the future, is just ask my investors. I'll frame it a little differently. I'll say how much would someone have to pay you to sell your whole stake, and that's how I'll come up with my price. But yeah, I think there's gonna, you can certainly just ask. You can ask and see what people are willing to pay. And once I had a conversation with an investor about the 100 million, and I got him on board, I was like, cool. I think I can take this price to everybody else, and they'll probably be fine with it. And it turns out they were plenty happy.
Yeah, the other thing I'll add too on valuation is that not the majority of the time, but a lot of the times it's based on the most recent round or the current round that actually has investors in at that price already. So a lot of it's already kind of led before we make that final determination.
Yeah, one other thing that just reminded me of is you want to be fair. You want to have, like I probably could have raised at a higher price, but that's a sort of short-term thinking, I think. And like I wanted to price the company in a range that I felt reasonable, which even though the markets are pricing companies with 20-30x revenue multiples, like I just think, if the market crashes, I want to make sure that Gumroad is still a really great investment for folks. And so I think a sort of a 10x revenue basis, if you have revenue, is a pretty good sort of like, place to start if you're looking for sort of a starting point, and then you can have conversations with folks and figure out where the demand actually is gonna make your price end up.
So Michael, we're going to head to you shortly. Before that, Professor Ken, I'm coming back to you for a repeat of something we said about an hour and a half ago. I just want everybody to know, what are the key rule changes that just got implemented? So I know one is test the waters, that Sahil just mentioned. Another is we moved from 1 to 5, and another is the SPV. Can you just really quick let people know what that all means from a legal perspective?
Yeah, definitely. The SPV model is, or the SPV change is interesting. One of the most common concerns that we get from founders that like, hey, if we take in 1,000 investors, is that gonna result in a messy cap table? And the different solutions, right? So Republic uses a save or a crowd save, and other platforms and us use also the custodial model. But this special purpose vehicle is where everyone invests through into an LLC. That LLC shows up as one shareholder on the cap table that used to not to be, not allowed, and now it is. So that's one component. The second one is it used to be that you got to go all in, apply, do the accounting, gap financial conversion, file the Form C, and then you can tell the world that you are going to take in retail capital. That's a lot of work to go in there without knowing how it's going to pan out, especially for new businesses that do not have a significant customer base. Now you quote unquote can test the waters. You can, tweet about, you can run an ad if you want, and see if you have that interest, that demand before undertaking the effort to launch a campaign. And one of the, the fourth, I think, is the most important one, is the ability for accredited investors to invest above this arbitrary artificial cap of 100,000. It used to be that even Tim Draper or Jason Calacanis, they couldn't invest more than 100,000, give or take, in equity crowdfunding deals per year, and that's a very, very unfair, and there's no rationale to that necessarily. So that has been lifted as well, and obviously the crown jewel is the $5 million cap increase raised from 1.07. That was the limit before this 2 days ago or yesterday.
Thank you for that. I actually have a question for you in a little bit more of the gory details here. So my understanding is CEF campaigns can now be run every 30 days as opposed to what historically was 180 days. So you only have to wait 30 as opposed to 180 before you run your next campaign. Do you understand that as well to be true?
Maybe Chuck, if you don't mind clarify, my understanding is that there's a limit on how much one can raise. But if you raise $1 million and then after you close the campaign, 30 days later, you want to run another campaign, I don't think there's any prohibition to that now. I wasn't aware of that barrier before either.
Yeah, there's none that I know. You have to run your campaign for a minimum of 21 days. If you decide to close on the 22nd day, that's cool. Then you can actually launch your second campaign on the 23rd day if you like. We've had plenty of campaigns that, for whatever logistic, strategic reasons or operations reasons, have closed and literally launched their second campaign the next day. So there's no waiting period after your first campaign, as long as you haven't already raised the total maximum for that 12-month period.
Got it. Super interesting. So now that the max is up from $1 million to $5 million, do you think there's going to be more of these sequential raises?
Yes, and there's also additional layered rules that are layered in for your second campaign. Mostly deals around with getting an audit. At a certain dollar amount, you have to get an audit for your second campaign. So it can be a little restrictive. Most people don't really care, that they're cool with that. They're going to get the audit anyway. So it just takes a little bit longer for them to launch. So I do suspect people will also be using this as part of their capital raise life cycle, their capital stack, where if they need it for, they have a campaign, they have strategically planned to raise more capital in 6 or 12 months, they'll come back and have investment crowdfunding be part of that current raise as well. And if you don't mind, I do have one question I wanted to ask. I think is actually kind of important it's something I think about a lot. I think it's important for people who are considering running an investment crowdfunding campaign. And Slava, you're great for it. Sahil, you'll be great for it too. We all know rewards-based crowdfunding and Indiegogo, Kickstarter, etc. I'm wondering what you think the psychological differences are between being a participant in rewards-based crowdfunding versus investment crowdfunding. And what are some of the things that potential issuers in investment crowdfunding should be considering when they go into their campaign when it comes to that psychological difference?
Yeah, absolutely. So we built Indiegogo in 2008, and we're running perks campaigns, rewards campaigns till 2016. And then we did launch an origination platform for equity crowdfunding, did 150 deals there, 97% of them filled. So we have a lot of experience across both. I think there's a lot of similarities, but I do think there's differences. A main difference is the equity crowdfunding campaigns. The companies in general have to be more baked and more put together. That's not to say that a put together company can't do a perks campaign, but the bottom threshold is lower. So you have sometimes these fulfillment risks of whether or not it's too complicated. That's not to say that an equity campaign won't hit those things, but as part of your diligence, you get to analyze it and often see revenues. I believe most equity campaigns, Kendrick or Chuck, please correct me, most of them have ongoing revenue already, right? Rarely are they starting from a zero revenue, limited customer equity crowdfunding raise. Is that right?
That is the case, Slava. I hope that that's going to change or expand to, service pre-product, pre-market, new companies at one point. But right now, the vast majority of companies coming to Republic to raise already have, revenue to some extent, oftentimes even exceeding $1 million per year.
Yeah, exactly. So, with equity being the ultimate loyalty, it's hard to invest when there's not much to be loyal to yet. So many of these perks and rewards-based campaigns are often in a place of innovation and testing and trying to R&D if this product should come to market, if this new thing should become a business line. So I think that's one of the key differences.
But as a participant, like an investor, do you, a participant for rewards-based or an investor in an investment crowdfunding, do you think their psyche on the investment side is more leaning towards they want a return on investment, or do you think it's something else, or is it something similar to rewards-based?
Well, I think everybody gets involved with these alternative investments for their own reasons. Some do it for passion and some do it for profit. I've been collecting baseball cards since I was a teenager and basketball cards and hockey cards. And now some of them are very expensive. And I could say I'm getting a good profit in return, but I came there for passion. Similarly, some people are investing in rewards campaigns for passion because they like to be first movers. They like to have the water cooler talk when we had water coolers to talk next to. And they like to be able to be first at the adoption. Now, those same people could say, I'm actually doing it for quote unquote profit because I'm getting at a 50% cost versus the retail price when it comes out for one of these electric bikes. So they're just looking at it as an arbitrage opportunity to buy it on Indiegogo 6 months before it goes on sale in retail. So, people approach these things in different ways. And I believe equity crowdfunding is similar. Some will look at it as a simple asset class, which is, look, Sahil just told us he priced it at 100 million. It's low. I'm going to make money back. Great. Fun. Like, bring me more dollars. And I gave you. So others are like, I'm just part of the creative movement. I want to support. I want to be part of this. And they're like passionate about it. And if along with the passion comes profit, that's great. And it's actually often how it works out. So I think it really depends on the person and the specific campaign.
I can't agree more, Slava. That's exactly our tagline, which is aligning passion and profit, just empowering people to, bet and vote and have a stake in whatever it is they're passionate about. And investing should be exciting and interesting. It should not be this boring and scary thing that everyone should do. You should get a financial advisor to help you out because that's a responsible thing to do, but it's so boring and dreadful. I think that's very much like, that hopefully the future is moving away from that for more and more people.
Yeah, that was an awesome answer. I hope that helps some of the people that are thinking about doing a campaign. So that's why I was asking, and thank you.
Yeah,
absolutely.
I mean,
and I think this. Sorry, Sahil, are you talking?
No, go.
I think this whole wave of alternative investments is really that combination of passion and profit, and we're really seeing the momentum build. I think people getting into crypto, people getting into these trading cards, collectibles, people doing the GameStop movement. I mean, the public markets have been available for investors for so long, but the common investor feels like they just don't have an advantage. They don't have a way to beat all of these institutions or to find a way to get a little bit of leverage or some, information inefficiency. And these alternative markets, equity crowdfunding being one of them, and others being debt, collectibles, crypto, and art, is just an opportunity to look for your passions and at the same time potentially find inefficiencies to make money, which it's going to be a lot of opportunity this decade.
I like to say earn interest on your interests.
Nice.
Love it.
But yeah, the other thing I just add to like how people think about this is they want to. It's a sort of a status thing, right? Like they want to be able to say I was there. I think $1,000, $100, $10,000. I think for a lot of people it's a binary thing. I want to be involved. I want a seat on this plane. I want to see where it goes. And I think founders who lean into that and are going to bring these people on a journey and can promise that, I think we'll see a lot more success than people who may just say, this is a retail decision that you want to make, or, you want to pick this tier because you get this thing. At Gumroad, I decided to do no tiers, no nothing. Just you're paying for a seat on this train, and we'll see what happens. And I think that's why a lot of the folks signed up. I would say one other thing is it's about education. A lot of people reached out and said, hey, I'm putting in $100. It's not super meaningful for me, but it's basically I'm paying $100 for your online course, except it's not a course, and it's an investment, and I'm just going to be forced to learn about all this stuff. And that's going to help me when I decide to start my own company someday. So I think there's a lot of that sentiment too, where there's going to be this cyclical thing where a lot of these newly minted angel investors are going to get acclimated to this whole new system and decide that they want to start companies too. And they'll crowdfund those, and the cycle continues.
A perfect example is, I was living in Soho and just walking around and seeing these lines at these stores. And I would ask, I'm sorry, I'm dating myself for sounding old, but I would ask these young people and say, what are you in line for? And they would say something like, oh, like these new sneakers are about to drop, whatever name of the sneaker. And I'm like, oh, so what does that mean? Like, oh, there's just a few of these sneakers available. And I would see this walking around Soho, just these lines, and it was just fascinating to me. And then I got the opportunity years ago to be one of the early investors into GOAT. And I remember talking with my wife, and she's like, what do you know about sneakers? Nothing. You don't even dress well. And I just thought to myself, like, this is interesting. Like, people want to be able to differentiate themselves through various ways. And, this is interesting. And again, was that a pure profit investment? Was it obvious that GOAT was going to do hundreds of millions of revenue and, potentially one day go public? It was not obvious. Was that a profit investment or a passion investment? It was mostly passion. And like Sahil said, maybe I'll learn. I love marketplaces, and it turned out my interests got me interest. So that's a perfect example. All right, Chris, do you have a question?
Yes. First of all, Kendrick, kudos to your design team. I'm a designer, and the UX on Republic is really slick. So my question is about diversity and inclusion. One thing I was struck by when I landed on the Republic user interface is how you highlight diversity and inclusion. And so my question is, what has been the response from investors to diverse founders, and how is that looking in terms of the numbers? Is the response good or is it not good? I'm a Latinx founder myself and curious on any insights on how diverse founder background affects investor response. Thank you.
Hi, Chris. When it comes to product and design, I can take no credit for it. In fact, my co-founder, our head of product, Peter Green, is in the room, and that's all his work and his team's work. On the question of inclusion and diversity, of course, similar to the, I think, false narrative about doing a CF campaign, adverse selection, meaning you can't raise venture capital. There's long been this narrative that impact investing somehow doesn't yield the same return potential. Statistically, that's definitely not the case, right? I mean, stats show that companies with a diverse team, that companies, public and private, with a female co-founder performs far better, I think 30% based on certain metric, than companies with all male founders, such an example. And the space, particularly when it comes to equity crowdfunding, is still early enough. But that's typically a question that I think institutional investors or investors that are deploying a huge check, that we see that from those investors a bit more. Retail investor investing $100, $20, $800. The passion and profit alignment that Slava and Sahil and Chuck just touched on, it comes to apply in such amazingly positive way, because let's just say that you're very passionate about gender equality or veterans, and you decide to invest $100 behind a company, not because you like what they do, but because the founders are veterans, for example. That alignment, I think, excites investor that much more. And so I think when it comes to retail capital, the narrative around impact investing and diversity being somehow suggestive of lower in quality, I think you see less of that in conversations among the retail investing public compared to venture capital or professional angel investors. But time will tell, and I have no doubt that with a little bit more data and traction for the entire industry, we're going to see crowd investing performing at least as well as venture capital. Right now it's speculative on my end, but we'll hope to have this conversation a few years out, and I would love to to be right on this note.
Great, thank you.
Thanks, Chris, for your question. Stephen, are you ready for your question?
Hi, yes, Stephen Russi. First of all, congratulations to Sahil for today's fundraise. We actually met once through Ray Tonsing. We went by your office once. So I'm glad to see you're doing well. And a question for Republic. You talked a bit about secondaries. And I think that's like actually a difficult problem to solve, because you do a public round, and then if you have a secondaries and you want to do another round on the same platform, what happens when you have information arbitrage, you have some disparity, where, like, let's say somebody comes in, raises some money, and then later on there's the secondary, and the float's not very large. So there's not lots of trading going on, in which case the price could be kind of moved around a bit. And then a second offering comes around, and the founder, sets the price again, like you did originally. And so how are we going to manage that? Because there might be like people, bidding up and then getting reset down, and I mean this happens now in you go do private secondaries, and if you're not able to price things right, you have it emptor. But I'm curious how you're looking at that from a platform perspective.
Hi, Stephen. It is a difficult question, one that we've been thinking about day in, day out for the past few months. We're talking about a product and an industry, not so much that they haven't existed, it's just that no one has built them correctly. And so right now, there's almost no liquidity except for the most mature of companies, right? Or in the crypto market. So when it comes to liquidity or secondary solutions, there's two different issues here. One is the technicality. How do you make it feasible? And the second question is supply and demand, and that highly dependent on each offering, each company being listed. The technicality component, RegCF has made it very simple. After every single campaign, CF campaign, the securities can be sold to any accredited investors immediately. So that enabled the existence of a secondary market in a way that under Reg D, private investing, that wasn't possible before. Now, of course, there got to be some demand in order for there to be actual liquidity. But the notion that you can even do it at all, I think, is something that at least investor would want to know. Let's say a company is pre-product, pre-market, hasn't even generated much of a revenue, and they've done a primary offering under Reg CF. And then after that, investors or some existing investor go on the platform and offer to sell back the shares. I don't know that there's going to be any buyer. But as the company matures, I think that it's still early on, but I think depending on the demand and the interest, these are data points that can be helpful for founders, for the company to decide how they should consider, how they should look at valuation. And if this optically, that means that the public perception is such that that's not consistent with what the company or the founding team or the management team thinks of the company itself in a negative way, then perhaps there's some marketing and some PR to be done to rectify, to fix that optic problem before they go out and do another public raise. So at the end of the day, it's still too early to have all of these questions answered. I think the only way for us as market participants, being in the industry, is to have a conversation with founders, with our investors, and figure out a cogent way and roll out a product that have all of these things considered, but understanding that we will have to tweak the product as the industry continues to mature. So long-winded way of answering your question is that we just got to be thoughtful about it. But I think that with every what seemingly is a con, a potential disadvantage in the case of what if people are trading at below how the founder would value a company, that can be turned into an advantage because it's a data point that otherwise the company would not have.
Yeah, and then I would add that right now the potential trading would happen within the origination platform by doing matching, and we're already seeing that in other verticals. You're seeing a lot of that happening already in trading cards, for example, and other places. But I do think for significant liquidity to hit the secondary markets, there's going to have to be cross-platform secondary liquidity so that you won't have to be locked within an origination platform. So, I mean, it's all very interesting. So let's just do a reset here. So thank you, everybody, for joining to the equity crowdfunding discussion. Just yesterday, the rules changed where you can raise up to $5 million, and we have some incredible people on stage. We did have the Congressman here earlier, so Congressman McHenry, who helped drive these rules forward for the last decade, since 2011. So sorry for those of you who have missed out on hearing his thoughts. But we also have Kendrick from Republic, Republic.co, doing amazing stuff, and Sahil from Gumroad, Gumroad.com, and myself moderating the discussion of all these great speakers from Vincent, so with Vincent.com. So Sahil and Kendrick, do you guys need some water? Do you need a break? Do you need to end the room? What are your thoughts?
Well, I'm just so fascinated with liquidity, and I really think it's a very solvable problem. I think maybe Gumroad's in a little bit of a different position than a lot of folks who've crowdfunded, but I think there is so much demand, so much liquidity potential. I would love to launch that yet tomorrow if I could, So, Kendrick, if you ever need a guinea pig for any weird experiments, like I will be the first person to offer my company to you. But I think it's a very solvable problem. Like I would love to sort of see a matching thing and know as maybe allow people to match like the day before we plan to do, it's sort of a year from now, I guess, March 15, 2022, and get a sense of where you think the price is at. And then, I can make a decision as a founder, like, do I want to tell the world that this is the price Gumroad is at, right? So I think there's ways around sort of, figuring out the right level of transparency and opacity to that sort of, gives founders the data that they need, and then they can decide sort of like the level of liquidity. Like we might just do one trading day a year or something like that. And based on where that price ends up, the next day we do, we issue $5 million more worth of Gumroad stock at whatever that price is, right? So I think there's going to be a lot of interesting innovation around the space and different ways to go about it. But my goal simply is to get to full liquidity as soon as possible. That is my number one goal for Gumroad. Is I would love Gumroad to be effectively a publicly traded company without having to be publicly traded. I want to eat my cake and have it too.
That sounds like an interesting, needle to thread there. So, Kendrick, how you feeling? You still good to go for a little while, or do you need to end soon? I know we've been talking already. For those who are recently joining for over 2 hours and 20 minutes now. Kendrick, how you doing?
Oh, I'm good for as long as you would have me.
He spent like 5 years talking. He's spent a decade talking about this stuff, and so have you. And
all right,
I'm only a few months into it, so.
Amazing. Christopher, if you're ready to ask a question, we would love to hear it.
Yeah. First of all, just thank you so much for all the science you and the other speakers have been dropping. It's a great clubhouse when you spend half the time with a little notepad next to you, just taking notes frantically on all of the cool stuff. So thank you all very much for that. I had a question specifically about all of your thoughts on, and it actually dovetails nicely into what Sahil was just talking about, in terms of potentially using not only this new crowdfunding ceiling that's just dropped yesterday, but potentially, and Kendrick mentioned something about using Reg D in a different way. But I was wondering about your thoughts on maybe for some companies that have a little bit more maturity, or they raised a small round, or they raised a crowdfunding round, they have a bunch of safes on their cap table for that. What are your thoughts on Reg A and Reg A plus, and potentially tokenizing equity for some secondary market with some other partner there? Do any of you have any kind of like strong feelings about either of those models, and maybe any potential to try to integrate sort of a turnkey Reg A plus solution into any of the platforms?
I'll take a stab at that question, Christopher, and thank you for joining us. The way I look at Reg CF, Reg A versus IPO, it's like a bike, a Honda Civic, and a Ferrari. So graduating from a Reg CF to Reg A is literally the equivalent of like, buying a Honda Civic after riding a bike, because a Reg CF takes, $10,000-$20,000 in fees, and it can be as quick as a few weeks, maybe a month, to launch the campaign. To do a Reg A without touching crypto, at least a couple $100,000 in 6 months, and you gotta get qualified by the SEC, right? So that's a significant cost and a lot of time. So not for all, you gotta be a pretty mature company and gotta be willing to undertake that effort. IPO is a couple $1 million just to do it, and probably a year plus to prepare for it, and the maintenance cost. When you add on tokenization, and I'm a firm believer in the future of every single financial product, every form of financing will be at one point done on a tokenized basis. People won't even need to know what it is. They just know that they can receive a digital token representing their dollar investment in a safe, in a food truck, for example, down the road. But that's today, that's not the reality. I think for rare exceptions, a company that is not deep in crypto right now should not be looking at tokenized offering just as a way to tap into the frenzy around the crypto market. There's some for which that tokenized offering may be suitable, but for now, I think that RegCF at 5 million is a very, very realistic, rational, practical, usable means to raise capital from retail. Reg A, the pool of companies that are suitable to do Reg A that much smaller. And when it comes to tokenized offering, I think I haven't seen 1 out of 5,000 companies that I think that maybe this would work. I hope that's helpful, Christopher.
Thank you. Absolutely. Appreciate it.
All right, so we're going to probably wrap up soon, probably at the bottom of the hour. So if anybody has any final questions, please just get in line. I know there's some hands already up there. Mag, if you're ready, what is your question?
Hello. I don't have questions.
You don't have a question. Okay.
Yeah.
Sorry I brought you up. So let's just take this moment. Are there any final thoughts, Kendrick or Sahil, that you have that you want to share with the crowd? I know you've been talking for so long, and obviously, if people want to get in contact with you, you're both very open. What's the best way? So Kendrick, please go first.
Yes, sir. And if I may borrow Sahil's words from earlier, I think if you're an investor, I think the name of the game is to start to learn. Because the minimum can be as little as $10, $20. In fact, you can even just get the experience and cancel the investment. There's no better way to learn investing by starting to do it. It's the reverse for founders because it's so complex. So learn before you start preparing and launching a campaign. And, our team is there, republic.co/apply, and our team will give you a range of information, whether or not you're going to launch on Republic. But this Clubhouse session has been so valuable for me. And thank you again, Slava and Evan and Sahil for having me. But for founders, absolutely do your research, get to know, get to talk to, people like Sahil, and then decide for yourself whether this is the right thing for you.
Great. Yeah, I mean, I agree with that. Like, just start. Just I think when I first started exploring Republic a couple of years ago, the first thing I did is I just went to Republic and picked a company from the homepage and invested, and went through that experience, and did it with some other crowdfunding platforms too. I think it's a good exercise. You don't know what you don't know, and there's no better way to find out. I will be writing. If you're a founder who's interested in like my approach to it, like I will be writing something, probably some long Notion memo or something like that about how I would think about doing it, the different steps from a sort of my perspective. So if I'm sure you'll hear about it if you follow me on Twitter, but you can, my email sahil@hey.com if you have any specific questions between now and then, or you can follow my newsletter on my website to get pinged about it too. But it's really not as tricky as you may think. Like a lot of people were like, man, your past few weeks must have been insane. Like, and it's like, not really. Like I did a 1.5 hour long board meeting thing that I do anyway. And I basically set up a Kickstarter campaign page, like it's really not as, the amazing thing about these crowdfunding portals like Republic is they do so much work for you. They've spent years and years and years and years figuring this stuff out. They have institutional knowledge, and it's all built into the pricing model. So I think it's an amazing resource that makes it possible for someone like me who would never be able to figure this stuff out, would probably break the law 50 different ways trying to. Knowing that they're there to answer any questions is pretty useful. And Ken's phone number is.
Sorry, so
I was just joking.
Oh, okay.
I'm not gonna.
Perfect.
I do text Ken a lot.
I'm more than happy to share mine, but an easier way is candarepublic.co. But yeah, thank you so much, Sahil. Yeah, it's an early days for our industry, but I hope that at one point all entrepreneurs will be doing some sort of retail fundraising in a few years.
Amazing. And for us, we really just see equity crowdfunding and this new Jobs Act change to the 5 million as just another one of the pillars of the movement on alternatives. The folks in this room and others are looking for more diversified exposure beyond just their equities and bonds. And, that's what we're working on at Vincent. So specifically with Vincent.com. Anybody can email me at slava@withvincent.com if they have any questions. We were really excited to promote Sahil, work with Kendrick as one of our partners on the supply side. And it was incredible to see that on day one, an entrepreneur was able to raise $5 million from over 7,000 investors in 12 hours. With that said, thank you for all who've joined for the last 5 minutes or for the last 2.5 hours. There's so much to learn, so much to innovate forward. And with that, I'm going to be leaving. I think some others might be as well. So I think this room might be dying. But have a good rest of your night.
You just want one call out. If I assume you're gonna. This was an amazing conversation. I mean, getting Congressman McHenry in the room, it's like amazing to be able to do that. For people who don't know, he's basically very largely responsible for not only equity crowdfunding but the 506c rolling. Like, there's so much that he's helped us do. So that was amazing. I assume if you follow this club, you're going to get notified for more cool stuff. So I would recommend people do that. And Slava, thank you so much for putting this together, for promoting the offering, and for all of your advice along the way.
You got it. Absolutely. Great teamwork. So I'm going to drop. Thank you very much for everybody, and have a great night.
Awesome. Take care. Thanks so much, Ken. Thanks for building Republic. Thanks. It's been awesome. Take care, everybody. Bye.